Hi guys, hello Warriors. How's everyone doing today? Paul, yeah, nice call. Mary, who else is around here today? Richard, Kareem, how are you? Ugo, is that Hugo or Ugo? Good morning to you.
Good morning, Dale.
Hey Ryan,
Morning, guys.
Hey everybody. So, I want to start off with a tip of the hat to some guy who had the community staying bullish. The yen from 110, Ryan and K-Man, and then getting the chat room short yen from the top yesterday. If you were in the chat, if you weren't in the chat, you need to get into the chat. So great call yesterday, came in. Nice work.
Thank you very much. Good morning, Dale. Good morning, everybody.
Good morning. Good morning. ECB day, guys. So how's Lagarde going to screw everything up today for us?
Any which way she can. Any which way she can.
Yeah. So, potential reversal week in Euro. And earlier in the week, I talked about a possibility of an outside week to the upside. We still would need to trade above and close above par 79. 10079. So we'll see what happened. Paul was mentioning, that the pound was oversold yesterday, and we talked about, some pretty glaring divergence in cable. Doesn't look that bad, does it? So, what are you guys doing? Sitting on hands and look to react to her press conference?
Yeah, pretty much. It's funny, how long have we been looking at Euro Sterling, talking about the 87 level? Typically, right on the ECB, we're right up there, testing it. But I don't want to touch it with this big risk event.
Yeah, maybe we're topping here. It's been a heck of a run. That's a pretty negative candle. I know there's 92 targets, but yeah, I wouldn't be long up here. We're not confirming any of this action. Yesterday's action. Oh, well, yeah, we did. We did on the 4 hour. Anyway, maybe up. Yeah, okay.
It was up, and it's come down on the UK stuff, Liz Truss and her energy support packages and whatever, which is being taken positively by the pound at the moment. Okay. So that's why we've got the moves. But get the ECB out, we could be at 88 or 85 in a blink. It's the risky binary. Same for euro dollar. Same for pretty much every pair at the moment.
Yeah. Well, since I've been saying from the mid 83s, and you were saying it as well, I think, Ryan, I think 90 is the next level, and at 90 we have a huge decision to make. But we're almost there. We're getting there. Go on. No, I was going to say I personally think that the ECB is probably going to try and front load as much as they can in terms of hikes. So I think between a 50 and a 75. 75 is not priced in today. It's somewhere in between, if I recall the Ionian market. I have to check again.
60. It's 0.66.
0.66. So right in the middle. I think.
Good morning, by the way.
Good morning.
Good morning, Blake.
If it wasn't for the alter. Hello. If it wasn't for the ECB always being on the dovish side, I would have said 75 is done. I still think they're going to do 75 because this is their chance to get as much as they can, front load as much as they can before the poop hits the fan in Europe. So that's the only reason why I think they're going to do 75 rather than 50. But then again, it's Lagarde we're talking about. Very, very dovish always. So the force will be strong to resist the 75. But I think that's what they're going to do.
And do you mind if I take over the chart?
No, you don't even have to ask anymore.
Well,
just quickly, Blake, if I may. Paul's asked if I've got a sell on it because we were talking about this euro sterling in the chat room.
Oh, do you want me? I'm sorry. Do you want me to show the euro sterling, or do you want to take over the chart?
No, it's just a quick thought. I mean, as I said then, if we didn't have the ECB coming up in 10 minutes time, I'll be trading this all day long. This 87 level, I'll be in with a short and a stop reverse on if it broke. But the risk, because
That
there's such a
looks
big
like
risk,
87 and a quarter, right? Like these highs
Yeah.
right through here. Yeah.
I've got to factor it in, and it's too much risk to be on a trade. You know, I could put in a short with a stop reverse and get flipped out on both sides. So I'm going to wait to see what happens. If it breaks, if it's hawkish and it breaks, I'll be looking for a confirmation of the break, maybe a test of 87 to then start getting into longs on it.
Yeah.
It's annoying we're here over this.
Just going back into the euro. I mean, I was talking with Chris Weston doing the trade-off last night, the trade-off show that he does, and you know, I made mention of this, and I think you guys and gals can all agree that you know, we've been burned with trying to bet on a hawkish ECB many times, and especially in the Lagarde regime. And you know, you look at the euro, there's a lot of overhead resistance. If you look at this, you know, the main resistance is this blue trend line that you can see here, that's had us really trapped in a bearish trend all of 2022. So, you know, in order for the euro to even start to turn bullish, we got to get above, you can see the 50-day moving average, which has been a it's contained this trend. You can see it's in orange right here, right? It's contained that trend. It comes in at 101 and a quarter. Then you've got this descending trend line that's capped us all of 2022. That comes in at 101.70. So you think about it, like, you know, a lot of people are going to go, oh my God, she actually raised rates by you know, 75 basis points. And then, you know, by the time she speaks and think about how dovish she could be, I could really very much see, and I have 0 euro exposure right now, but I could very much see a move, you know, up to 101.50 in a reversal in a situation like today, where you get this hike, but it ends up being a dovish hike after the press conference. What do you think? We haven't heard from K-Man. I heard Greg's voice back there. What do you guys think? Let's start with K-Man. What do you think with the ECB today?
Well, I mean, the risk is, well, I mean, I think they do 75, and then we will see what they say. There's a couple of interesting details, perhaps, where if they say anything about the APP or even the euro level. So far, we only had 2 vague allegations that the euro is not helping inflation. It was even in the statement that one last time, if I recall well, but we haven't heard anyone saying the euro is too low. So it's not my base case, but we can never ever discount anything. If Lagarde would turn hawkish, then the euro can fly. Anything else, I think we either stick in ranges or we find tops to sell it again, in my opinion.
Yeah, I mean, I'm gonna just speak on the behalf of somebody who's actually right at this very moment in time short dollars in different ways. And you know, if you're in the ForexAnalytix, this is the chat room. You can see in the trades room. You know, I just closed out a little bit of my dollar yen short from yesterday. You know, these are, you know, just the trades room, the general chat room, the macro flownomics room, you know, everything else. I'll just put that back. But I'm definitely going to benefit if the dollar weakens and the euro, you know, rallies past, let's just call it the 101.10 level, which is going to be previous support from over here. I don't know if it's going to happen. I mean, I'd be tickled pink to see the euro, you know, scale 101.50 on a hawkish ECB. I don't know. I don't see it. But okay, but let's talk to Greg. Greg, what do you think here?
Hey, well, not sure how hawkish or aggressive they can really be with all of these issues, but maybe they will stick with the Fed plan, and they realize that and ready to accept that higher rates will cause even more troubles to the Eurozone in the future. But I think that the most important will probably be the message on the press. If they will continue to raise, maybe we'll be ready to raise more in upcoming meetings. But looking at the wave structure itself, we are coming out of this wedge, as you're shown on this chart. And it looks like that this, as a shared in the chat room, the rally from the lows is impulsive. It's in 5-wave. The minor 5-wave move suggests that even if it's just temporary bottom, that likely we will see more upside. And as you said yourself, recently 101.50, if I'm not wrong, that's a very reasonable level to look for potential resistance.
So somewhere up here. All right. And by the way, this is Grega's wave count from ForexAnalytix, because he's our in-house Elliotician, if you will. So
ending diagonal, huh, Grega?
Yeah, exactly. It was there in a fifth wave, and I also obviously see the US dollar index, of course, in the same situation. I think that there is a very late stages of the recovery, and at the same time, the S&P 500 touched that 4-hour trend line that I talked about in the week ahead video, and that trend line actually, obviously, the response away from it supports the idea that maybe dollar is about to see some weakness. We are now turning higher away from trend line. We already retested it, and as you know, we are approaching 4,000 around there.
So we're in the C wave right now, B2C,
yes,
right?
We are in this correction. Eventually, that trend line, in my opinion, will give way, but it may take time for this correction to unfold.
All right, Gregor. Well, thank you very much. We got about 4 minutes before the interest rate decision happens. Did they just flip the time on me, or am I just thinking crazy this morning? I know
they changed it last month.
They did. I was like, wait a second. I'm like, this is, I'm sitting here scratching my head, and I'm like, well, it is like 4 a.m. here, so I'm like, maybe I'm just tired. But they did change the time, right? Okay.
Yeah.
Crazy.
I just want to highlight something quickly, because we've got a potential big issue with this. Between the two main calendars, between the two main calendars, Reuters and Bloomberg, they've both got different expectations for the deposit rate. Reuters is only saying expecting a 50 basis point hike. Bloomberg is going for the 75. Now, a lot of traders watch these calendars, so whatever the rate is, it's going to be disappointment on one, expectations on the other. That could cause a little bit of a flip around in markets on the announcement.
Okay. Thank you very much for that. And well, I'm going to actually put us on. I'm going to pull up a couple of panes. We have the euro dollar, obviously, that we need to be watching, and I'm going to put it on a 15-minute chart here, just to kind of keep us. You guys know there's like really we're stuck between 99 cents and 101. I mean that there's a couple trend lines now. As you can see here, coming in at like 101.0050, this little descending channel, but really it's like 101.50. So I'm going to just keep it on a 15-minute chart so everybody can kind of see that. What I'd actually also like to put up here is I'm going to put up, and I know it's, even though we're going in North American trade, I'm going to put up yields too, and I want to see how yields respond, because if the euro does rally, we should see yields continue to weaken. One of the other things, and I want to just say this really quick, crude oil is weak, and it really needs to stay below $85. And if it's popping up back towards 83 right now, and that does worry me a little bit, because I'm actually short some Canadian currency as a result of what I was looking at in crude. So I'm going to be watching crude kind of close today. All right, so the ECB decision's coming up. Stelios, you have any final thoughts here?
No, I just want to know, is there a starting diagonal or just an ending diagonal? Sorry, bad joke. I don't have anything else to say.
Yeah, your dad jokes are like the force is strong with you. Dale, you have any thoughts here? We got about a minute before that comes out. What are you thinking with the ECB? Anything jumping out at you?
No, but since Greg is here, you know that Elliot was bipolar.
Because, oh my God, your dad jokes are horrible too.
Because he said hello to everyone he saw on the street. He was very impulsive, and he almost got divorced because his wife was corrective.
Oh, please stop! Please stop! Oh my God,
that's it. That's for you, Greg.
Ryan, any last minute thoughts here? Great observation about the deposit rate. Any other observations?
No, I'm just getting ready to pump the numbers, mate.
Okay, and I know he's going to be jumping in he's going to be pumping out all that information via social media, in our chat rooms, in the Flowonomics room. K-Man, any last minute words?
It's coming out right now.
Okay, all right.
5 seconds.
All right. Yep, here we go.
Okay,
Zippity doo dah, zippity
Euros
day. What do we got?
pushing
It
higher.
takes time. It takes time. Here we go. Oh, bloody hell.
75. There you go.
75.
We said it here.
The deposit rate, and look at they
And 125. Yeah.
they raised rates by 75. So okay, well, it's interesting. It looks like that was priced in. It's 0.66% is what the market was expecting. So 75 basis points. Yeah, all right. So we got it now. When's this press conference start now? Now that they've changed the times?
Is that right? In half an hour. Yeah.
Is it in half an hour?
Yeah, half an hour.
So in about 30 minutes, we got the press conference. That's where the rubber meets the road, right? I mean, she could come out and spin this completely in a dovish, a dovish way, and yields have come back down too. So that's going to keep the dollar suppressed.
We've got the ECB projections as well. Inflation expected to average 8.1 in 2022. I think that's quite a big jump. It says this major step front loads the transition from the prevailing highly accommodative level of policy rate towards levels that will ensure the timely return of inflation to the ECB's 2% target. So front loading, that's what their mission is.
Well, who would have thought that?
You heard it from Stelios first here, folks. That's right.
One more thing I want to say, actually, for those who followed me with the silver trade, I'm taking my stops to break even and just running it now. So that's looking nice at the moment.
Well, that is looking nice.
Nice call,
and
man.
I mean, look at it. Well, let's spend a little bit of time talking about precious metals. Matter of fact, Stel, speaking of silver, that was my play of the day yesterday. I have to come up with a play of the day from on the trade-off with that. No, it's the trade-off thing with Chris Weston. Anyway, I was looking at silver too, and that was my choice, just because we had this bear flag pattern, but we really didn't complete that false breakdown. Really, at yesterday, the confirming move back above 1815. Yesterday was the first time we got the close back above it, which to me was like, okay, now we can kind of play it as a false breakdown. And I love it when patterns don't complete or they get really close, because this means, like, I'll just show you right here. Like, you start getting all of these orders, lumped in right around, and this is gold, for example, around that 1680 level. You get so many bids down here because everybody's trying to play it just like this off the supports, right? And so you get these lumpy bids down here. And so we never end up completing a pattern, which really suggests that there are so many bids down here that we are going to get a reversal. Gold's showing the same type of thing, but I can't get really bullish gold until we're above 1750, and then that turns, really bullish in my opinion. But there's a lot of work to be done still, but I like these precious metals. I think they're starting to shape up nicely. Yeah, silver is the same way too. False breakdown finally starting to show its true colors. So way to go, Stelios. Good call.
Thank you. It's good to be lucky sometimes.
Yeah, I'll take luck in this business. I will take luck. So let's ask Dale. Dale, what are you looking at today, and what are you thinking about as we head into the end of a shortened week? We've got Powell today. We haven't really discussed that. We have Powell. He's part of I think he's putting up an opening statement for this monetary policy meeting, but he's also not the monetary policy meeting. The meeting is called, let me get the name of it for you guys and gals. Cato Institute.
Over the past 40 years.
What's that?
Monetary policy over the past 40 years.
That's the
title, I think, of the
title. Okay.
Of the symposium or stuff, and then we've got
so wait
I got Canada Rogers as well talking there.
Wait, K-Man. So I mean, he's going to talk about monetary policy that you've experienced for the last 40 years. I bet you're going to be like keenly interested in this.
So I was going to finish saying that he's probably going to talk for 2 minutes about the past 38 years and then for 35 minutes for the last 2 years.
Right, that makes sense. That makes sense. But he's going to be breaking down basically your career in the markets via monetary policy. So, what do you think he's going to say?
Absolutely nothing that he hasn't said already.
Well, so going back to like what the last, basically the last 2 years, and
Yeah, but
the guidance he's going to provide. I mean, what do you, my opinion is, especially if you start looking at the dollar, we are, obviously in a very bullish trend, but at what point does he start saying, we are getting close to meeting our expectations? And I don't know if today is necessarily going to be that day, but he does have some Q&A. He is in a Q&A panel. So he is going to be, he could say something which could influence the dollar today, but I'm not sure what that's going to be, and if this is even the right venue, but interesting. What are your thoughts on the dollar at current levels, K-Man?
If you look at the US yields, they're coming to rest, especially the 10s and a bit longer. They're resting on a few interesting levels around this 320, 319 zone on the 10s. You see what I mean? And
Yep.
There's also a bit of horizontal stuff going on there. It's always been a bit of a traffic zone, this thing. So that's going to be a bit important. I also think there's not too much reasons for it to come down based on the past data. So I don't expect much from the Powell man to change anything. To me, this whole meeting and thing might be more interesting to hear what Bank of Canada Rogers has to say, because that comes a day after their meeting. And usually they talk a little bit about what they've done on the Bank of Canada meeting. So I don't think Powell is going to fight against anything dollar related. I don't think so. No.
Well, thank you for your input on that. It's great that you bring up the 10-year yield. I'm going to bring up a chart just because this is important analysis, and I want you guys to really understand this, because I want to show you how unbiased we have to be in the markets. Okay, as from an analysis point of view, if you're not aware, if you're not aware and you haven't been paying too close attention the last 24 hours, let's just call it this week, we're targeting in dollar yen a move up to 145. As Dale said, K-Man and Ryan's really kept us on the right side the last few days. I was kind of a bozo here. I took a trade, long pretty aggressively below 140, scalped out of it. I got out of it like at 142, thought I was a hero. Then it continued up to 145. And then I turned around and I got short, and I am short, some dollar yen, but I can't ignore the fact that we are in a bull flag pattern. This is analysis that was posted on ForexAnalytix today. And as an analyst, I could very easily just put up something that's very biased and say, not show everybody this. But the fact of the matter is we do have a bull flag developing. The fact of the matter is the breakout point is at 143. Fact of the matter is yields, as K-Man pointed out, is sitting on really key support. So really, if you want to, if you're like not in a dollar yen position, this is actually a very bullish setup. And like if I wasn't short dollar yen from up here, I'd be looking at this going, man, I'm thinking about being long with stops below 143. And you have to, even if you happen to be on the other side of the trade, like me, I happen to be short, I still have to be aware of this very bullish setup that, is consistent with what we've seen. If you look at the dollar yen, it's very much a, bull flag pennant, setups consistently in the market. So, what's to say that this is it? We're not going any higher. I don't think that's, fair to anybody. So you gotta be willing to observe both sides of the market, even if you happen to be in a trade. And I think that's important that you realize that. And it's important. And that's why when you're reading like our analysis on ForexAnalytix, we are very unbiased, our team. Everybody's got views and everybody puts them up here. So you can see all different points of view in the market. That's why, the charts may look similar, but you'll notice some differences because, different people are uploading analysis. It's not the same person at all time. So anyway, I just wanted to point that out with the dollar yen because, like I said, I'm short, but that doesn't, dismiss the fact that we have a bullish setup at the moment. And K-Man brought up that yields are a very, very important support on the 10-year. So I don't know if Stelios is still around, or is Steve here? I'm not sure if Steve has any input here. He's been in a lot of meetings. If you don't know this already, he said this yesterday. We have our next event for Trader Summit coming up in a little over a month. So Steve is going to be kind of hit or miss because he tends to spearhead.
I'm here, mate.
Here. You are? Okay. Hey, Steve. So
I absolutely am.
We have a new event for Trader Summit coming up. You want to talk a little bit about that?
Yes, we're going to have another Trader Summit, which was to be expected, of course. I mean, this is an ongoing thing. We are going to be focusing the next Trader Summit on things that are very, very much related with the energy crisis as well. So, we're going to try to make it as always, very relevant. And I think we're going to have, as always, we're going to have an assembly of very, very great people. So you don't want to miss that. We are hoping that the page is going to be up and running in about 10 days from now. So you can actually register for it. Of course, it's going to be free. You just need to register. What else? Yeah, that's it.
All right. Well, thanks, Steve. And I want to just remind everybody, you're going to be a little bit hit or miss over the next several weeks as you are leading the charge on Trader Summit. It's a great event, guys. Obviously, we have a lot of great speakers that come up. You know who I'm meeting with actually next week? I'm gonna be talking to Eric Bosmajian from ECB.
Oh, nice.
Yeah, and Dale was the one who really introduced me to him, and we're going to talk about the U.S. housing market and the housing market just in general. So that's going to be a really neat conversation. I got to do actually some homework regarding that. Anyway, so make sure you guys are staying up to speed on TraderSummit.net. There's always new stuff uploaded every single day. If you go to this breaking views, this is all the new stuff that comes out like every single morning. It's a good place to get your start on in the morning, no matter where you are in the world. All right, so real quick, any views on the S&P since we are I know Greg gave his views about the S&P a little bit earlier. I want to just make an observation that we are still holding the 618 retracement. You'll notice this is a level that we wrote down yesterday in ForexAnalytix. It comes in at 4010. It's actually like 4015, but you can see it right here on the bias chart analysis from yesterday. S&P, well, it's 4020 is what I wrote down because of the spike highs up here. But we clear that the big like confluence area is back at this 4100 level. So this whole area right here, in the event risk appetite does take off, and if you've been watching cryptos have firmed up over the last 24 hours, dollar's showing a little bit of weakness. If we do break above like 4010, 4015, 4020, I think we got a good opportunity to just have a little bit of a short squeeze in the markets, and that could come as early as today with Powell. Obviously, we have Lagarde. She's going to be talking in about 15 minutes or so. Just some opinion there. What do you guys any opinions about the S&P? K-Man, Ryan, Stelios?
I'm not touching at the moment. Yeah,
you're not touching. You're just trading silver. I'm not sure.
You mentioned cryptos actually, and yes, they bounced a little bit, but they're still not trading well. I mean, they're still not following risk the way they used to. No, still underperforming.
And I think that speaks that to how heavy and how eventually we're going to break down. But like you saw this bounce in like Bitcoin, we basically completed this flag pattern. I mean, within pips of that flag pattern, which I would argue is already completed. So, but hey, Bitcoin might make a higher low. That means maybe more consolidation, right?
Yeah, I think the most likely scenario is lower, but yeah, it could be. Could be.
Hey, well, don't forget Ethereum. We've got this merge happening, that's got all Ethereum traders all up in arms, the buying it. So, I mean, maybe that might help with the recovery trade. You really just need to see, in my opinion, you need to see looser financial conditions, and that really starts at the top with the Fed chair, right? So if the Fed chairman just gives us a wink and a nod of dovishness today, maybe some little dovish slippage of a Q&A answer, that could be the catalyst that drives risk a little bit higher as we head into the weekend. I'm going to assume that people are pretty leaning into the market on the short side over the last few weeks, especially with the failures at the 200-day moving average, whether you're talking about the S&P, you're talking about the NASDAQ, couldn't even make it to the 200-day moving average. The Dow was a false break above the 200-day moving average. And the Russell 2000 gave us the false breakout, as it always does historically this year. So when you have all of these failures in U.S. equity markets, you've got everybody leaning into shorts. The thing that I have to say is we have held the 618 retracement this week. And if that continues to hold, I would argue that there's more of a consolidation ahead of us for the next couple of weeks than really a breakdown. So, but that's where I stand. And I just realized I'm bleeding into Dale. You have your interview. Who do you bring? Who do you have today? Dale. Oh, he's here. Dale's not here.
Oh, I
think he has.
Oh, you are here. Oh, it looks like
Harold
Malmgren.
Malmgren.
So what you guys and gals are in for a really great treat. Always exciting to hear Harold here. And I was just listening to him on Blockworks, I believe, on one of the macro shows. He was on there just like last week, or not last week, like maybe 3 weeks ago. So it's great to have Harold here. I'm not going to take up any more of your time. Make sure you guys visit our supporter and our sponsor. That is the Trader Funding Program. Check out the Trader Funding Program. And if you want to learn how to trade a larger trading account without taking the risk, because we take the risk, you just get 75% of the returns. Check it out, traderfundingprogram.com. I'll put the link for it in the description. And Dale, it is all you, my friend.
Okay, I just want to end it with, it's okay to be a hawk or a dove, but don't be a pigeon. Harold Malmgren, welcome back. How are you, buddy? Harold, so you're all over the different media places nowadays?
Yes, I've been asked to appear on a lot of different podcasts, but I'm trying to keep it down to just a handful.
Okay.
So much is going on, as you know. I mean, we have complete turmoil now between developments with the Russians and the energy, but it spreads all over. So I'm, as you know, as your listeners will know, I'm not going to spend time on the Forex market tomorrow, or
of course not,
or the S&P, but rather put it in a context.
Okay. All right. So I want to know what's front and center on your mind.
Number one, what is being underestimated everywhere is that this downturn that we're looking at is not just Europe or the US recession,
global,
but it's global, and it is most severe actually in China. China has reached a point where it is unlikely to have any growth at all, economic growth this year. They may fudge and get some 2% number, but the demand for their exports is weakening dramatically, and the domestic demand is simply inadequate to keep the economy stable.
Will they relent on zero COVID policy for these reasons you just stated?
There's some doubt. Xi Jinping is so much obsessed by total control that he's more interested in control of everybody and their behavior and COVID or any other interruption than anything else. He's in a mode of thinking that was somewhat like the old Soviet Union. Only what's acceptable can be said, no action can be taken. So they're frozen right now. They are fumbling around for ways to ease up the economy, but
hey, Harold, I want to ask you something. You know, it showed pictures of Putin. You know, anytime he had a meeting, he was like 10,000 feet away from whoever he was talking to, and Xi is making that trip to meet Putin at that conference, and it's the first time he's made a trip in 2 years. So maybe they both have a deep fear of COVID, and they're Xi is projecting it on his whole nation, although it does give him the excuse to have control, have people use less utilities, maybe eat less, and maybe get them prepared for war and blame it all on the US.
Yeah.
What do you think?
That is probably what's on his mind now. Regarding war, there's not Xi Jinping cannot do much before this October plenary meeting, where he's hoping to be made leader for life. But there is some resistance, so he is dealing with not a smooth transition. The big surprise right now is Putin seems his health has improved quite a bit, so he's not doing those long tables anymore. Now, what's important to understand here is that China, the four big engines of growth for many years now, many decades, China, Japan, Germany, and a lesser extent, South Korea, as the industrial exporters. And their export of manufacturers has been an engine of growth for everybody else. I think we've now just turned a point where that mercantilist type of policy has about run its course, and that we will not see a major rebound in manufacturers' demand on the global scale. During this recession, the U.S. is in recession, whether we want to define it or not, but mild recession so far. But China is going to go into a deeper downturn. And of course, Europe is going to go into a horrific downturn this winter because of energy. The emerging markets are all going to be beaten up by the very strong dollar. So I think everybody has to prepare for a hard landing. And
how do you do that?
You really have to think about what assets to hold and what to dump.
Okay. And, do you like gold in this environment?
Right now, to me, the no-brainer is investing in longer maturity treasuries, because they, no matter what, I mean, if you bought just 10 years, now you can almost assume a gain in 1 year of a 15% in value, at least.
So you think yields are peaking? You get the coupon plus some capital gains?
That's correct, and you won't be able to. Well, its capital gains may be larger for some foreign investors, depending on how much they hedge, because the dollar will stay strong and may even get somewhat stronger. Now, a second point is, some time ago, and in particular in the show you were referring to, the Blockworks, I said Yellen wants 110 for the dollar index or higher. She wants that pressure on to help keep the stock market up by encouraging large institutional investors worldwide to stay in, but also it imposes severe pressure on China, and that's part of the policy.
It also reduces inflation because the dollar's been strong, right?
Yes.
Okay, so we got to 110, Harold. Is there a chance this might be it? And Yellen, Yellen may not get her will for 120?
Someone said I said 120. That was misquote. But I have been saying it, that 110 is not necessarily the limit.
Okay.
She would like to push it a little bit more. By the way, because of that, I don't expect Powell to talk about currencies, because he knows that's Yellen's game, and so he's staying in his sandbox.
Isn't that the topic of his speech coming up, I think, tomorrow? Talking about currency?
If he does, it will be very careful, because I don't think he wants an open conflict with Yellen.
Okay.
No.
Does he want a digital currency for the U.S. so they could track everything we do?
It's premature. It's under heavy discussion, but that's a long way off, and we've got an election coming, and we've got another election after that, and a lot of resistance, particularly on the Republican side, with the balance of opinion moving, against the government knowing too much about everything individuals do.
Okay, so really the narrative I'm getting with you the first 10, 15 minutes is there's going to be a global recession. China's, we're already in one here in the U.S.
Right.
China, which was given credit for pulling us out of the Great Recession in 2008, at least partly, because they were still growing, could actually be the ones exacerbating our recession with their problems. And Europe, it's obvious to everyone what they're going through. So if you talk about owning treasuries, even though they've been in a bear market, it sounds like that's where money will flow to during these times. And will equities be under severe pressure while bonds rally? Because they didn't the first stage. Actually, bonds led the decline before the stock market peaked. But now you think that they're going to act the way they used to in the old days, where you get a sell-off in stocks and people buy bonds?
Yeah, well, let's put it simply. We have a recession. It will not be short. For the U.S., it's going to run at least through next year, because the demand is going to be weaker and weaker on the consumer side. And as far as Powell is concerned, he's not going to say it publicly, but my reading is that he wants a pretty strong recession. He does want pain. He does want to see, he can't say it, but he does want the unemployment rate up. So
he has kind of said that there would be pain, and there will be.
But he's using the pain as a word to obscure the real deal. But what I'm telling you is he wants to see numbers that show broad pain across the spectrum, including even the labor market.
Right.
So partly he wants the shock effect. Now, as regards the equity market, we'll still bounce around for a few more weeks, maybe affected by who knows what, including Treasury trying to keep the equity market where it is until we get through the midterm elections. But if you take, where will the equity market be early next year? I think the argument can be either we're going down with the S&P to around 3,000, or maybe even as low as 2,200.
Okay.
We're
So I
talking
know a lot of, I hear that 3,000 target bandied about. That's actually where we were pre-COVID. That was a prior high before COVID.
Yeah,
okay.
But we might go lower.
Yeah.
Now, the bright side of all this is the US recession will not be as deep as Europe or China or the emerging markets. And we'll probably come out ahead of the others gradually. But the damage to the credit markets is going to be severe because worldwide there's a huge amount of debt that is denominated in dollars. And so we're going to see a lot of defaults, insolvencies in the banks and the shadow banks.
So a banking crisis, Harold? And where does it start in Europe? I mean, there's been talk about Italian banks for years now, and European banks that did not clean up their balance sheets like the US did. Could that be where the fire starts? Last time it was here because of mortgages.
Yeah, may well be, because right now you will see very soon, in weeks, a battle between the Bundesbank and the Bank of Italy.
You mean the ECB or the Bundesbank?
Well, it'll be the Bundesbank giving orders to the ECB. Yeah, you can say the ECB, but I mean,
they want to bring back the Deutschmark and tell the rest of Europe to go to hell.
I don't know how they'll resolve it, but I think Lagarde doesn't really know what she's doing in this. She's an attorney, but the Bundesbank anyway wants to force a crisis with Italy, and that's going to be really rough, because you got a new Italian leader coming in who is not experienced with anything like this. So it could be chaotic. We're going to see a lot of fragmentation within the EU and the ECB as the pains of the energy crisis plays out.
Well, that's Putin's goal, to split NATO. Which countries would be most amenable to breaking with NATO and doing a deal with Putin so they don't freeze to death this winter? Are there any candidates?
Yeah, definitely. And unfortunately, they're the big ones.
Germany
and Italy at the beginning, but France under pressure. Spain and Portugal.
So NATO dissolves this winter.
Yeah, they all have some different ways of relieving the pressure. France maybe can work its way through. There'll be more gas from Algiers, for example, coming into Europe, into Spain. But it's going to be political fragmentation, a lot of arguments. The Baltic Sea countries will hold together militarily and in economic policy, and they will be a kind of separate bloc. And NATO will have a face and a name, but the operational part of NATO will be the Nordic countries, Poland.
Okay, so the
Netherlands.
people willing to fight and even go through hardship, like
Yeah.
being in a war
Right.
or being on a border with Putin,
Right.
because they've gone through it and they have a long memory of what it was like to be under, you could call it Russia or the Soviet Union's thumb, will stand up, whereas the democracies like France, who remembers Germany, never really lived, or Germany, Germany should have a long memory because they were split in half, but they're still going to fold.
Yes.
Okay.
Germany, and it won't be one leader in Germany. It's just the parties. It's a coalition of parties, and they don't have any strong single leader. So
Okay,
it's
well,
gonna
if they're showing, all the advances that Ukraine has been making on the ground on their counteroffensive. So whatever is happening militarily, if what you're saying happens this winter, Putin wins.
Yeah, he may lose on the ground in terms of battlefield, but he wins in terms of the damage to the cohesion of Europe, and he gets the upper hand in negotiations about the next few years. So it'll be a really interesting period.
That can't be good for the dollar, Harold. I know there are, economic reasons why the dollar could continue to be a wrecking ball, but I just can't see, this is the coalition developed by Biden. He's there for another 2 years despite the midterms. It can't be good for the dollar if we see a dissolution of NATO and Germany now cooperating and cutting deals with Vladimir Putin.
Yeah, I think his team have no clue how to deal with Europe at all.
Well, why don't you take a ride over to the White House and straighten them out before we're in, huh?
Look, I've been close to this with many presidents, sometimes working and on several occasions, I was asked to come back as National Security Director. But this team right now, they're inexperienced and uninterested in what's happened in the last 20 or 30 years. They have new ideas of their own. So I would have to say they're not fit for the purpose.
All right. I want to bring up something I heard. Did you ever meet Henry Kissinger? Do you know him?
Oh, I know him well.
Okay. So I saw an interview. I didn't conduct it, but I saw an interview and, what's happening on the battlefield. And Kissinger said he met with Putin several times. I think you met Putin. And
yes, I have.
Okay. So he was saying, they were talking about potential escalation, taking it to another level, maybe even tactical nukes. And Kissinger said that Putin's doctrine is de-escalation through escalation.
Yes.
Is that true?
Yes.
So are you worried about him, going to the next level since he can't do it on the ground conventionally?
Yes, I have been beating that drum for quite a while, but can't get anybody around Biden to think about it. But
they're going to use that reactor, or are they going to use one of their own?
The reactor is a sideshow.
Okay.
Putin does have capability to use small-scale nuclear weapons to teach a lesson to everybody, scare everybody in Washington, and force a bigger discussion among the great powers what to do.
De-escalate through escalating.
Yeah, and he's been thinking about that since even before he became president. So, I know a lot about that escalation, de-escalation, because I was deeply involved in the Cuban Missile Crisis in those decisions in the war room of the Pentagon. And ever since, I've been, let's say, a semi-expert on that entire process of when and how such weapons should be used. And I do think Putin is actively thinking about it all the time, looking for an opportunity to freak out Washington and London and other countries. There is a danger and a great reluctance on the part of the Biden people to address this more directly. The British have quietly been encouraging and opening arms control talks with Russia. And the Biden people say, now we're busy with elections. We don't want to deal with it. But I think there is a real danger.
Okay. Do you think Trump shared nuclear information with Putin?
I don't know.
I'm not getting political. I'm just talking about the papers that were found there.
Yeah, maybe yes, maybe with the Saudis, and maybe it wasn't Trump. Maybe it was his son-in-law. Who knows who actually did what?
Right.
But something bad has happened, because there wouldn't be all this fuss about pieces of paper without something more deep. But we don't know yet. No one can judge whether you're Trumper or not. It's just impossible to know what it is that is creating all this pain and worry in Washington in the security area.
Okay. All right. So definitely precarious times we're living in, Harold. If you could give people one piece of advice on riding through this historic period, what would it be?
I think basically there are only really two options, and they're not alternatives. I think, yes, be long in treasuries, because you'll definitely see rates coming down as the recession subsides. So it may take a year, but second, be heavily in metals and and areas like fertilizer, because we don't have enough, and eventually all of that will have real value no matter what else happens to the operations of the economy.
Okay. Crisis Investing by Harold Malmgren.
Yes.
Okay. So I really appreciate talking to you as always, and I'm glad that you select us as being one of the places that you come and share your wisdom.
Well, it's you, Dale, that got me in this, and so I like talking to you. So,
thank you, Harold. All right, and be safe, and I guess what we have to do is you don't know if you have faith till you need it, and right. So you stay close to your family. You have people you can depend on, also help, and community is probably more important than ever before. It's in 70 years.
Yeah, the big concern for the next couple of years is going to be local communities, local stability at a time when everybody's unhappy and restive. So it's exactly right. Look after your neighbors and your friends and your family.
Yes.
And don't worry so much about the world, because you can't do much about the turmoil.
And don't tell anyone where you've buried your silver and gold in the backyard.
No.
Right?
Well, that's correct.
Thank you so much, Harold. Great talking to you. Appreciate your perspectives, and we'll catch up in the winter, see how things are unfolding. All right, buddy?
Good.
All right. Harold Malmgren, everyone. Follow him at Hal's Rethink. Go to his website, malgren-si.org, and his daughter Pippa's with him. He's got a lot of great advisors, and read what his papers, and you'll be prepared both economically and geopolitically. So that's a wrap, everybody. You could join the team in 15 minutes for the morning edge. Remember, in these times, don't just count your pips, count your blessings. We'll see everyone to wrap it up for TGIF Friday. Adios. Thanks again, Harold.
Right. Thanks. Bye.
Bye-bye, buddy.